This is one of the most oversold stocks I've ever seen. All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to go through 3 stocks that I think you should add to your watch list. I own these 3 stocks either through owning the stock or options, and they all have one more thing in common. They all hit their 52-week low yesterday. 2 of the 3 hit their all-time low yesterday. So I think they're worth putting on your watch list. I just want to show you what they are and talk a little bit about them. So if you're new to the channel, please subscribe and hit the notification bell. And of course, please, if you enjoy this video, please smash the like button and feel free to leave a comment below on your thoughts on these 3 stocks, or if you have any others that are at their low that you think people should add to their watch list. Lastly, there's a link in the pinned comment to our free Discord, and we're just about at 500 people, so we would love to have you join us. So check that out in the link below. Okay, the first company is Curiosity Stream, stock ticker CURI. Curiosity Streams hit $2.76 yesterday. Now you'll see today we're having a bit of a green day. Today is Tuesday, March 15th. So yesterday was a very down day in the market across the board. So a lot of things were approaching their lows or hitting their lows. So today there's a bit of a bounce back at the moment, and you can see Curiosity's up 6% on the day, but this still leaves them very close to both their 52-week low, which is also their all-time low. So the market cap on this stock is now down to $166 million. You know, this has been on a steep decline. The other thing these 3 stocks have in common is they're all down over 85% from their highs. So these stocks have been beaten down significantly. One of them's down even much more than 90% off of its high. So if I go back to September, which was about 6 months ago, this stock was about $680 million market cap. So again, now it's down to a $166 million market cap. So this stock is way down. You can see there's 7 analysts that cover this stock. So on the average, they expect revenue to be up 79% this year and 70% next year. So this is a massive, massive growth stock. 70% is enormous. Now, the negative on this is they're not making money yet. So they lost a lot of money last year. They're looking to lose about 82 cents a share and then about 55 cents a share next year. So they have more than enough cash to cover that. So they're good on their cash runway. Companies that aren't showing a profit are getting sold off and drastically oversold, in my opinion. So you can see, as a 70% year-over-year growth company, this company is now at its all-time low. So if I go to the chart, here's the chart for Curiosity. So their all-time high was February 16th, 2021. So that is just a few weeks outside of the 52-week range. So, and also, you'll see on all of these stocks, there was a bit of a bubble in January and February of last year on the small growth stocks. So if you watch this channel, you'll know that I typically tend to point out, like, these all-time highs are probably not price target numbers that you want to be thinking about. This stock is down in basically 1 year. It's down 87%. So while it may not get back up to $24, it's currently trading under $3. So I'm going to show you some reasonable price points of prices it's been at over the last few months. So to me, the story has not changed here. It's still a very high growth company. You know, no bad news has come out on this company. Even from their November highs, they're down about 62% in the last 3 or 4 months. So this stock has gotten thoroughly beaten down in a period of time where, you know, there's been no negative news on them. I'm going to go to the daily time chart to talk about some price targets. Okay, so here we are zoomed in on the daily time chart. So each one of these candles is 1 day. So you can see yesterday, this red candle, this was Curiosity's all-time low. So it was its 52-week low. It's its all-time low. And again, it's down 87% from its all-time high. So there is a little bounce back today, but we're still under $3 on this stock. So the first thing I want to measure, if we were just able to get back to the stock price where Curiosity was trading on February 1st, so that was 1.5 months ago. that would be over a 55% increase in the price of their stock. We're actually ahead of earnings right now. They will be announcing earnings next week. So that, and you'll see this E right here. So that could have an impact in the future, but at the moment, there's been no bad news. I'm not expecting a bad earnings report. I don't think anybody is. I think they're a very high growth company, and I think you can expect to see continued high growth. If we just trace their price back 2.5 months, this stock would have to go up 113% to get back to where it was at the beginning of January. If we were able to get back to where they were near the end of November, that would be almost 170% increase in the price of their stock. And to put it in real numbers, they're a little under $3 right now. And their all-time high, which was just about 13 months ago, just outside of the 52-week window, was $24. So that would still represent nowhere near their all-time high. In fact, they would still be down much more than 50% over the last year. So again, these are reasonable price targets in my opinion. However, you've got to be careful because this thing's been going down in a straight line for almost a year now. So that's always dangerous. You don't know where the bottom is. Ultimately, the potential bottom is always zero. So please be careful, but I think this one's worth adding to your watch list. I added to my position in this yesterday. Okay, the second stock is Romeo Power, stock ticker RMO. So again, this is having a tiny little bounce back here today, and we're in the middle of the day trading. But yesterday, this hit $1.29. So this is another one. That is its 52-week low, and that is Romeo Power's all-time low. So on this one, this is down shockingly, and I'm going to show you a couple of numbers. So there's a current market cap of $181 million. Last January, so that was 14 months ago, this stock was worth $2.8 billion. So this is one of the most drastic decreases in market cap I've ever seen in any stock. And this is a stock that I own. And this is another one that I added to my position to yesterday because this does not look like a company, in my opinion, that's going out of business. They had a very rough patch due to some massive supply chain issues, which should sound familiar because that's half the companies out there. But I think there's a lot of room to the upside. Let's take a quick look at the chart. This is the Romeo chart on the 1 week time frame. So each one of these candles represents 1 week. So from their high in December of 2020, so that's now about 14 months ago, to their low yesterday, this stock is down 96%. I think this is the most I've ever seen a stock down. So, I'm not suggesting price targets anywhere between here and here was, just a run up. You can see this is only 2 candles. So on the weekly, they had 2 weeks where they were above this spot. So if you go down about 40% and we start there and assume that this, this was a bubble, even still from there, which was last January, they're still down 93%. There is so much room to the upside left on this stock. So this is one where you got to look at it, do your own due diligence, see if you think they're going out of business or they're going to survive because they're down 93% from being down 40%. So this stock is beaten thoroughly. I'm going to zoom in and do just a couple of price targets. Okay, so I'm zoomed in, so you'll see 2 purple lines. So this first line dates back just 1 month. So 1 month ago, they were trading at approximately $2.36. This stock would have to go up 80% just to get back to where it was last month. Now, they did report earnings. Their forecasted sales they had to reduce, but it's still, they reduced it to a number that's triple what it was in 2021. That's still very massive growth. So again, just to get back 1 month ago, that would be an 80% increase in the price of this stock. Just to get back to where they were at the beginning of 2022, so that's just 2.5 months ago, this stock would have to go up almost 200%. So 196.9%. And that's just over the last 2.5 months. So nothing drastic has changed with this company at all in the last 2.5 months. Their third and fourth quarter of last year showed massive improvement, and they are forecasting, triple the sales next year. Yes, they have had their issues for sure, but this is one of the most oversold stocks I've ever seen. So I added to my investment in this a little bit, down 96%. Please take a close look at this because this has gone down in an absolute straight line. The final stock I want to look at, and I'm going to cut this one a little bit shorter. I did not average into this, and I'm going to show you the reason for that. So this is now a $988 million market cap. So this is much higher than the other two we looked at. It's still under $1 billion. It's a very small cap company, but much bigger than the other two we looked at. I did not average in yet because of the following reason. If you look at their estimated earnings for the next 2 years, they lost a lot of money in 2021, and it looks like they're planning on losing a lot of money in 2022 and a lot of money in 2023. Their cash runway, in my opinion, is going to run out. So I think that they are going to have to do some stock dilution. So for me, that's the reason I did not add to this position. I only own options in this position, and I'm likely to either sell them at a stop loss or just let them expire. It's a very small position that I hold. So I'm waiting on this. I love this company. I think it's a great company. I'm keeping a close eye on it. I'm just worried in this environment with these big loss projections, this is likely to get worse before it gets better. And we'll just take a quick look. So from its high in December of 2020, so again, that's now about 14 months ago, this stock is down 89%. So this is another one that's just absolutely fallen off the map. Even from November until now, which is just 4 months ago, this stock is down 80%. So you can see why I believe there's a massive amount of upside left on this. I just feel like with some dilution ahead and the way they're treating stocks like this, this could see $3 before it sees $20. And those are I do think, in a 5-year period, this is going to get back to a $20 or $30 or $40 stock. Again, this is not financial advice. That's what I believe. But I do not want to suffer a 50% loss in the middle, which I think is entirely possible. So at the moment, I'm avoiding this. I may regret it later, Those are my 3 stocks that I think are worth adding to your watch list and taking a look at. So thanks so much for watching, and we will see you in the next video.